Bitcoin has recently set a new all-time high above $123,000, something that seemed so inevitable yet just out of reach for many months. However, after quickly falling nearly $7,000 from our peak, many investors are wondering if we've just seen this bull market top out. So we'll get right into it here by looking at the advanced NVT Signal chart we have here on BitcoinMagazinePro.com. Now what we can see is as Bitcoin has rallied in this latest move to about $120,000, we have actually seen this advanced NVT signal, one of the few metrics which is actually pointing towards us potentially being overextended and overbought to the upside, and what some potential bears are looking towards is evidence that we maybe have peaked for this cycle. And what we can see is if I just zoom in, we have crossed above this red deviation band. Now the advanced NVT signal is looking at the network value or market cap of Bitcoin and dividing that by the 90-day moving average of daily transaction value. So essentially when this is incredibly high above these standard deviation bands, it potentially suggests that the Bitcoin market cap is inflated compared to how much actual network activity and the transactional values we're seeing on-chain occurring. So what we can see is when we cross above these red upper deviation bands, like we recently did at $100,000 before we had this big retracement, or like we did in the previous cycles at cycle peaks, this potentially suggests we're potentially a lot there, we're maybe a little overinflated. What we can however see to the downside is once we cross beneath these green lower deviation bands, indicating that we're maybe seeing more network activity, more on-chain transactions of higher values compared to the value of the Bitcoin network, the market cap in general, we can see that this maybe suggests we're a little bit undervalued. What we can see now is, as I said, we're now crossing above this slight red upper deviation band, pointing towards us maybe getting overextended. Alongside that, we also have the active address sentiment indicator pointing towards something similar. So where the advanced NVT looks to the network transactional value, the active address sentiment indicator is just looking at the amount of users on the Bitcoin network. So what we can do is this gray line here, which might be a bit hard to see, so I'll just hide that. What we can see is this gray line shows us the 28-day percentage change in active network users on the Bitcoin blockchain, and we then have these red and green upper and lower deviation bands based on that data. Now what we can see is, again, similar to the previous chart, once we see Bitcoin rally substantially to the upside and we're not really seeing that backed up by more and more people actually utilizing Bitcoin, that maybe suggests that the rally cannot be sustained indefinitely. And the same is true for the downside. Once we have these huge downwards move and we're actually seeing more and more people using Bitcoin, it maybe suggests that we're a little bit undervalued. As always, underneath all of these charts, if you'd like a little bit more clarification, just scroll beneath them and you can get all of the information and logic and calculation methods behind them all. But again, if we just zoom in, we can see we actually crossed above this red deviation band a few days ago, and we've just crossed back beneath it. With quite a few of these metrics, rather than just waiting for it to cross above, like in this example here, it's actually better to wait for us to cross beneath it, like we did here at $105,000 before we had a little bit of a retracement and some consolidation, and then prior to that as well. What we can see is we have just crossed back beneath this. Well, yesterday we did as I filmed this. And another thing, if you're not a site subscriber, a lot of these signals, well, all of these signals that I mentioned so far actually come through to your email address. So you can get alerts immediately to see when we're potentially getting a big move in the Bitcoin price action. And if I just go to TradingView here, you can see if you'd have taken action on that signal, you'd have missed out on this big $3,000 drop we've currently had so far. But just looking at this price action chart, what we can see is we set a peak at about $123,200. It's going to differ by exchange. But if we just grab that, that is a retracement from the high to low that we've currently seen of nearly $6,800 in just about 24 hours. So a lot of people are potentially worried about this, especially if you zoom out and just look at this big upper wick in price action. It looks similar to what we see in other price action peaks. If we scroll back to the previous cycle as well, we usually top out with these big upper wicks before this big red candle, which doesn't look great in price action. But if we just go back to the website here, where is it? There we go. What we can see is there are a few other things that we maybe need to be paying attention to going forward to potentially see if we have topped out in the Bitcoin price action. So first is the supply adjusted coin days destroyed. So the coin days destroyed looks at the amount of BTC being transferred and weights that by the amount of time it was held, which might sound confusing, but essentially if I transferred one Bitcoin after holding it for 100 days, I would add 100 coin days destroyed to the network. If I held 0.1 Bitcoin for 1,000 days, I would add the same. But what we can see is with this, we're actually adjusting it by the circulating supply of Bitcoin. So it's slightly different to the normal coin days destroyed chart. And this has spiked massively to the upside as we've reached $120,000 new all-time high levels. Potentially, well, not potentially, it is showing us that some more profit taking is taking place by longer and larger term holders of Bitcoin. Now, it's not at levels yet that need to be concerning. We can already see in this cycle alone, we've already had multiple peaks substantially higher than this, but the fact that this is increasing, and if we go to the value days destroyed, is subsequently resulting in the value days destroyed showing a slightly warmer, slightly higher multiple on this. It just shows us that people are taking profit. But like I said, this is pretty normal at this stage in a cycle. We can see throughout 2017, we had multiple peaks considerably higher than what we're seeing now. And this was before Bitcoin went on to do another 5 or even 10x from those price levels. And even in this cycle, we've had multiple peaks substantially higher. So the fact that we're at a new all-time high, we've blasted through the previous all-time high by about $10,000, and we're only seeing slightly overbought levels on these more macro metrics, gives us some confidence. I know, like I said, with the advanced NVT signal and active address sentiment, they are slightly pointing towards some more short-term overheated conditions. But if you just zoom out, things look pretty good. And alongside the short-term stuff, we would just look at some macro things as well. We've recently seen the US dollar strength index, the DXY, jump to the upside, which again is going to result in some more muted Bitcoin upside potential, as we can see that the purchasing power of fiat currencies generally increases in the inverse correlation between Bitcoin and more speculative risk-on assets. Again, this is all just pretty normal, pretty typical. And alongside that, we've also seen some deceleration in the expansion of the global M2 money supplies, but these are just temporary blips. What we can see is on the macro trend, this is still very much to the upside. The US dollar strength is still very much trending to the downside and losing strength. And what we can also see is, even though we have seen some potentially more bearish signals on these more macroeconomic factors recently, we can see that due to the fact that the S&P 500 has continued to rally massively to the upside and Bitcoin's correlation to that, it's probably dragged us up a little bit as well. And we just go back to TradingView here, and if I just go to the S&P 500 chart, what we can see is we have had this big rally in the S&P 500, which is great to new all-time highs. Finally, Bitcoin is actually catching up with things a little bit, but we might now actually be getting slightly overextended on this as well. If I just look at the rate of change indicator, and for anyone that's interested, if you just type rate of change, the technicals one here, the built-in TradingView one is the one I always use, we can see that the rate of change over a 2-month period in the S&P 500 is exceptionally high. What I can do is if I just remove this, you'll see a few things on the chart, but the level in the rate of change we've seen in the 2-month S&P 500 is one of the highest we've seen in recent years. In fact, if we just scroll back, the last time we saw an occurrence of this was here in COVID 2020. And following that, we had a big retracement of around not big retracement, but in traditional market terms, a fairly decent retracement of around 8%. And it took a couple months before we actually regained that high that we set then. And if we just scroll back, when was last time we had it? Back here in 2009, just at the tail end of the global financial crisis. And again, what we can see is when we hit that level, we had a retracement around 8%. And again, it took just over a month and a half to actually regain that level. And again, if we scroll back, we can see multiple instances as this. They are rare, but when they happen, such as back here, we saw a retracement of around 6%. And again, it took just over 2 months to convincingly reclaim that all-time high. So if I scroll all the way back here, it wouldn't surprise me if we just do see a little bit of a cool off in traditional markets. And of course, due to the correlation impacting Bitcoin as well. What I've drawn here is some potential downside targets. So the green zone would be a more conservative, more bullish downside retracement target of just 2.5%, 3%. The orange one would be a bit more typical of a 5%, 6%, and then slightly lower around that 8% that we've typically seen as the S&P 500 has seen returns of this level. But again, all of these, if you just zoom back out, didn't result in some big bear market, some big massive extended drawdown recession. All of them were very temporary before we had these huge, massive, extensive run-ups in price action. Just because we've bounced strongly off the bottom doesn't mean that we're due to have a more drawn-out retracement. If anything, it just indicates that we were a little bit overheated and there's still plenty of upside room to go. So if we just zoom in there, we can see some potential targets. And alongside the rate of change indicating that, we can also see, if we look at the Crosby ratio down here, I'm just going to move myself over there as well so I'm not in the way as much. We can see we have reached this upper red region in the S&P 500. And if we look at the previous instances recently, such as here, we had a little bit of retracement in a few weeks before we actually made a new high after that. And again over here, another few weeks of retracement. And we just look back here, to this instance over here. This resulted in, well, a pretty major retracement eventually. We can look back here, which again led to multiple weeks of some consolidation. And here's some more drawdown after we reach this upper red region. So I would anticipate the S&P 500 to have a little bit of a cool off. And then that is obviously going to have this impact on Bitcoin, where we could have a little bit of a delayed period of price appreciation. Maybe the upside potential is suppressed slightly. But ultimately, as I said, if we zoom out, look at the short-term holder supply, we can see that this has finally started trend back to the upside. Now, this is a very positive indication. The fact that new market participants are flowing in, retail FOMO might be here again, and we're seeing the cusp of more and more capital inflows. This is a very bullish indication. And hopefully we can see something like we saw in the previous two run-ups we've had in this cycle, where we've had this big kind of drawn-out decline in the short-term holder supply. Then once we've actually reached this turning point, which we may be now, we have this big run up in new capital flowing into the market, which has really massively provided capital inflows and just some big purchasing power and just some big inflows to actually fuel Bitcoin's upside move. If we see something similar to that, which I'm pretty positive we will, especially after potentially a few weeks of some more consolidation, given everything we've discussed today, then this is going to massively appreciate the Bitcoin price action. But alongside that, what we can also see is, even though we have had this big rally up to $123,000, we might have a little bit of retracement to say the previous all-time high, 1090 spot about 110K, we can see that the funding rates are actually still fairly neutral. Things don't look too overextended, don't look too overheated. We have, of course, had a bit of a dip now, $7,000. If you go back a few years, $7,000 was the entire price of Bitcoin. So the fact that we can retrace that and it just seems normal and healthy and pretty minimal is pretty great, to be honest. But we can see the funding rates remain fairly neutral. We've not got carried away. This isn't something that isn't going to be sustainable. I think the fact that we've had this big break to a new all-time high, as long as we can set a solid level of support, some solid buy pressure coming in, some new market participants coming in and accumulating Bitcoin, some more institutional inflows from the ETFs and treasury company accumulation through Strategy and other treasury companies, things look pretty good. Especially if we look at something like the cycle capital flows, what we can see is we are nowhere near a cycle peak. This is looking at the comparison between the 1 to 2 year and less than 1 month realized cap hodl waves bands. And what we can see, we haven't had this big shift from new market participants accumulating Bitcoin at potentially overvalued levels compared to the historical averages. And we haven't seen long-term holders really begin to sell their coins. Of course, we can look at the supply just at coin days destroyed, the value days destroyed, and we do get some indication that that's occurring, but this is very early days. Looking at something like the short-term holder supply, we have significant upside potential to go, and we've just barely scratched the surface on what is possible for Bitcoin throughout the remainder of this bull cycle. Also, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your #1 source for Bitcoin analysis. So just to summarize, Bitcoin has recently set a new all-time high above $123,000. Now, this achievement should be seen as something bullish. The fact that Bitcoin is making new all-time highs is a great thing. Throughout Bitcoin cycles, it's not like we set a new all-time high and have to have this big retracement. Every time we've set a new all-time high historically, look back to the previous 2017 cycle, 2021 cycle, it usually results in many, many more all-time highs. However, what we can now see is bears are chiming in and saying that we've once again topped out in price action. Maybe they were a little bit salty that they couldn't accumulate Bitcoin at 60K when we were at 75K. And when we dipped down to 100K again, they were waiting at 90K. Whatever it is, they're salty, they're chiming in, just trying to diminish the achievement that Bitcoin has just done. But like I said, this is something that needs to be celebrated. I know it feels like an inevitability. It has seemed like an inevitability that Bitcoin was going to break higher, but to actually see it occurring, to see our wallets grow a little bit in size, isn't a bad thing. And what we can see is, looking at the data, we can see a fair amount of evidence that we potentially are overextended in the short term, a little bit overbought, potentially overdue, a little bit of some choppiness and some consolidation, but do keep in mind, this is short term. If we zoom out and look to a more macro analysis, we can see that Bitcoin still has substantial upside potential remaining. The trend in the macroeconomic conditions in terms of the US dollar strength index is still very much to the downside. Global liquidity is still very much on a trend to the upside, even though we've had a little bit of a blip in them. And the upside potential, looking at on-chain data and the technical data for Bitcoin, shows that we still have a huge amount of room to go. Just acknowledge that this is pretty normal. When Bitcoin has these big explosive moves to the upside, we do have a little bit of retracement. And if you look at something like the S&P 500, which has had one of the biggest gains we've had in a very short space of time, we can see historically this does lead to a bit of some consolidation, but this does not mean the bull cycle is over. This does not mean you need to be bearish at the first sign of a red candle. Just acknowledge that these things take time, be patient, and just enjoy the new all-time highs. Enjoy this bullish price action, because you've had to endure multiple years of bear cycle and just, let's be honest, some really boring price action this bull cycle, then this is very much deserved. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin, with over 150 live charts, personalized indicator alerts, which I will say are super helpful. I'm going to be honest, sometimes I just look at the alerts log and see what's happening and just make videos based on that a few days later. But rather than waiting to see what I have to say, if you actually subscribe to the site, you can see these in real time. You wouldn't have had to endure the down day we've had today of multiple thousands of dollars. And looking back throughout this entire cycle, it's just made things really easy. You don't have to check every single chart. It just comes through exactly when you need. You can configure them so you get the ones you like. It's really easy, to be honest. I know, of course, I'm a little bit biased, but they are really, truly amazingly helpful when it comes to your Bitcoin investing. And along with that, we have in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on this current Bitcoin price action. Are you impressed by this big run-up we've had to $123,000? Are you a little bit underwhelmed, thinking we'd go potentially higher? And let me know what your thoughts are, and if we have potentially topped out in this cycle. Do you think that that's nonsense, or do you think that there is some potential truth to that? Of course, there's always a possibility that that could be true, but I think looking at the data, in my opinion, that definitely doesn't seem to be the base case. And as always, thank you all very much for watching, and I'll see you in the next one.